What's up, everybody? Welcome back to the High Performance Trader. Today, we are going to be talking about the trades that we took 11/13/2024. But more importantly, I want to break down exactly what we were looking for, why we executed when we did, what was the specific criteria, right? Because there's a bunch of traders out there giving a bunch of strategies, but not many of them are getting down to the nit and gritty, right? We're going to be breaking down very strict criteria. What caused me to enter? What caused me to get out? Right? What I was looking for, the pre-market plan, and how we used our moving averages, our critical levels, and our RBI, GBI entry so that we can execute and capitalize on two phenomenal plays, right? So let's break right into it here. All right, let me make sure I come here, share screen, hold up. All right, give me 1 second. There it is right there. This guy, why aren't you? Hold on. Taskbar. My taskbar is like light in the way here. What up, Todd? You already know, man. We had a phenomenal day. Really good day. Really proud of. Here we go. Got it. All right. All right. All right. So trade number one, right? So I'm going to come over to here. Actually, I'm going to pull out the Discord, right? So let's go over to the Discord. I'm going to show you guys. I logged it over here in the HPT crossover, right? So it has been a phenomenal month so far for the HPT crossover, right? So if you're watching this video and you're new to the Discord or you're new to the channel, right, I'm going to break down to you a strategy that I look to trade each and every single day. It has very simple but specific criteria, right? Number one, it's off a critical level, right? In this case, that's open print. Number two, there is an EMA cross present, specifically the 5 EMA and the 21 EMA, right? It could be off the 50 EMA as well. And then number four, there is an RBI or a GBI present, which causes us to enter. And this is where we put our risk, right? So very simple criteria. This was the morning trade we took off open print. It was beautiful. Look at this. It was absolutely flawless. Price falls below the open. We get the cross. We get the retest at open print, right? So critical level, HPT cross. We enter short with the green bar that's ignored. I'm going to show you on the 2-minute and 5-minute what that looked like. We captured a move all the way down to pre-market low. This was literally a $2 move in less than 10 minutes. Complete and utter banger, right? This is what it looks like on the 2-minute. Look at this. Price comes up to OP, rejects green bar, ignored short entry, right? Literally short. Once we break the bar, we don't wait for the candle to close. We don't think about it. No, there is absolutely, positively no hesitation, just strict execution. Bam. We see our criteria, critical level, moving average cross, and then our green bar completely ignored. We enter short, stop above it, and look at the sell-off. Completely, utterly beautiful. Trade two. We capitalized off that. Was patient, stepped away from the market, and allowed price to even out. If you guys traded today, it was core CPI, fundamental news catalyst. There was intense volume in the first hour and a half to the day, right? So anytime volumes like that, yeah, I'll capitalize on a move. But if I start to see very large wicks here, like look at that wick. I do not want to be trading in those conditions, right? Be smart. Look at the data. Ask yourself, are your best trades in those environments? And if not, then don't trade them, right? Very simple approach. But price then comes back up to open print right here. We get a red bar ignored. We take the market long, targeting pre-market high, right? So we then captured a beautiful move to the upside, right? So let's break right into it. Let's do a little deeper analysis. Those were the two trades that we took. And well, first, let's go to the Discord. Let's break out the pre-market plan, right? Because once again, over here at High Performance Trader, we have a very simple approach, right? Very simple approach each and every single day, right? We look to play a bullish and bearish scenario, right? So you're going to see over here, SPY, pre-market plan, critical level to watch, end of day in the 1 hour 50 EMA, right? Well, end of day and open print literally lined up to a T. Once again, proving the significance of the critical level. You must watch the critical levels, right? So bullish scenario, waiting for buyers to step up at the 1 hour 50 and end of day. These are very important levels. I love seeing them aligned. Buying acceptance above this level, open print, means longs targeting, etc., etc., etc. Bearish scenario, if sellers maintain trend, defending 1 hour 50, I'm looking for short plays, targeting previous day low, etc., etc., etc. Right? So once again, look at how simple I'm approaching this. We have previous day low, we have previous day high. We have end of day in the 1 hour 50 right in the middle. When this happens, right, very similar to the day prior, it is a blueprint for a bullish and bearish scenario. Whoever can control that 50, and then I get proper entry criteria, I'm trading with. Notice, we're not predicting anything. We're going, hey, if I see this specific criteria off the moving averages, off the critical level, off open print, I then get into the market, right? There is absolutely no predicting happening, only reacting to what we see, right? So bullish and bearish scenario, very simple, right? And so the market opens, right? The CPI news comes out. I'm going to whip out the 1 hour here on the right-hand chart so that you guys can get an idea here of what was happening and how I used it, right? So end of day and open print, we're very close, right? Giving us a nice little sweet spot. Market opens. Buyers are trying to hold. Is my edge present here? Absolutely not. Why? Well, for number one, there's no moving average cross, right? Don't get me wrong. Open prints here, buyers hold it. This looks very bullish, but I'm not longing it. Why? Because the moving averages have not crossed. A very specific component of the strategy is the moving averages crossing. Until that happens, I'm not trading. It's that simple. Do I miss trades? Absolutely. I miss trades all the time. But more importantly, I took 2 trades today. Both were repeatable. Both made sense to me. Both had a very strict but simple yet effective trade plan behind them. And I feel really good about it, right? So I don't want to be taking trades that are A, not repeatable, B, are not statistically backed, right? The HPT cross is statistically backed. We have a 72% win ratio for the last 2 months. This is the strategy I want to trade. I don't want to be on a fly here, go, oh my God, buyers are here defending the open. I got to get in long. That's the last thing I want to do. Why? Because that's not repeatable. Guys, the most important part of our careers as day traders is that we have a repeatable approach. If it's not repeatable, meaning it's not specific, it's not well defined, it's not statistically backed, it's not clear, right? If it's not that, I don't want it, right? If you don't have consistent results right now, it's because your approach is not consistent. Input, output, right? That's Newton's third law. What goes in tends to come out the exact same way. Or it's relative, right? So once again, if you want consistent relative results, you need a consistent relative approach, right? So anyways, that's my little rant. But more importantly, there's no HPT cross here. Patient, bam, we get the cross right here on this candle. Boom. Once the cross comes in, the indicator signals, hey, conditions are shifting. This is why I absolutely love moving averages. Why? Because men lie, women lie, numbers do not, right? So the moving average is going to tell you, hey, something's happening. They're crossing. This isn't something you predict. This is something you see. It's very simple, graphical, presentation, right? It's easy to understand. And more importantly, it's very specific, right? So if I'm developing a strategy, I want to use moving averages, right? Because they determine trend and they tell you the strength of the trend, right? So those are 2 very important things that I want to know, I want to watch. That's why I love moving averages. Everybody on the team knows moving averages are extremely important, right? So anyways, price, then this red bar completely wipes out the previous green bar, right? This is what Todd, Louisiana's finest, calls a bear 180, right? Price is opening above the 21, closing below the 5, right? That's very bearish. But once again, we don't just enter. Why? Why don't we just enter right here? Well, for one main reason, we're very extended from the 9D EMA, right? That's that blue line. So going back to learning to measure the strength of a trend, I do not and will not enter far away from the 9. Why? Because statistically, anytime you're more than 50, 60, 70 cents away from the 9 DEMA, I've done the math, I've collected the data, you get pullbacks into it. So if I'm a day trader and I'm looking to capture a move down to pre-market low, and I get this very large red candle, I don't want to enter right here because my risk is undefined, right? So once again, bring it back to having a very repeatable approach. You have to define exactly where you're going to stop out of this trade if it doesn't work your way. So I need to be up close to that 9, right? It's that simple because once again, statistically, numbers are telling me you're going to get the pullback. And if I get the pullback, I could get stomped out if and when that's not defined. See, it's extremely important to approach the market this way, to be aware of this. Otherwise, you're going to constantly be getting caught, chopped, and screwed because you cannot discipline yourself enough to remain patient and develop very strict but easy to read entry criteria. All right. So I hope that makes sense to you guys. But more importantly, we're extended, so I'm not shorting, and we're still above the 50. Right. So I don't want to enter this yet. But when I see this, I then go, all right, where's my 2-minute time frame? So now I whip out the 2-minute and I go, okay, we just sold off. This is what it looks like, right? We just got this mega sell-off. Buyers are looking pretty weak right here. We closed below end of day. Now I need my entry criteria, right? So number 1, critical level, open print. Number 2, moving average cross. Number 3 is the simple, clear, well-defined entry criteria. What is it? I need a red bar ignored or a green bar ignored. A lot of traders ask me, Josh, do you do this on the 5-minute or 2-minute? To answer your question, I use both. You cannot be ignorant or naive to think only one time frame is going to work for you. Learn to understand what's familiar and go with that, right? There's no right answer. There's familiar and there's unfamiliar. There's healthy, then there's unhealthy. There's order, then there's chaos. You need to understand these concepts and implement them in your trading, right? You need to go, hey, what's familiar? Well, anytime a trend's reversing or we're identifying large money controlling a level, you're usually going to get an EMA retest, which we get right here. We're retesting the 50. We come up towards open print here. I'm sorry, wrong chart. 2-minute chart right here. So we break below open print. We come up to end of day. We come back up to open print. Open print, to be exact, is defined right there. So we come up to open print and then bam, big red candle. This red candle right here, the 10 a.m. candle Eastern, completely wipes out the green candle. I enter short right here, and my stop loss is above the green candle, and I'm targeting 595.40. Right, so let's whip out the discard and get the exact time I called this one out. 10 a.m. Eastern, in shorts, open print stop. November 13, 2024, targeting previous day low, and then in 5 minutes, the first 5 minutes, I'm trimming because how fast this happened. Now at 10:07 a.m., money shot. At 10:08, I booked it, right? So at 10:08, 8 minutes this trade took, all the way down to 10:08 happened on this candle right here. I booked it right at the end. Josh, why did you book it right there? You said previous day low. That's a very good question. Let's look at the 5-minute and see how far we were extended from the 9 DEMA. Look at this. Like, you guys, if you struggle with entries, or I'm sorry, with exits, use the 9 double exponential moving average. Right? Look at that. We're $1.52 away from it. What I say earlier, statistically, anytime you're more than 70 cents away from it, you're going to get a pullback. So if I'm trading SPX, anytime I get extended more than 70 cents, I'm taking the profit, right? And more importantly, you got to get aware to what extensions look like, right? I've done a lot of deep study on this topic. So anytime I'm really extended from that 9 DEMA, I'm taking the profit, right? That's just my approach. That's how I do it. That's what I look for. And it worked extremely well, right? So this was a very good trade. Once again, critical level. Number 1, number 2, moving average cross. Number 3, green bar, ignored, entry short, bam. Right? So let's go back to that 1 hour. I want to give you guys a trick that has pretty much changed my entire life. 1 hour time frame looks like this once I get out of the trade, but this candle is completely red. Now, once again, we're very extended from the 9 on the 1 hour. If you guys look at this, the 9 was hovering right here around 59671, right? That's about $2 away. So not only did we use the 9 DEA on the 5 minute, but we use it on the 1 hour as well. Why? Because the same principle applies. If you're extended, you're going to get a pullback. Look at this yesterday. Look at this. Previous day low yesterday. Look at how far we are from the blue line, $1.80. What happens? Price snaps back into it, right? So you need to get familiar. Same with the day before. Look at this. How far are we right here? $1.90, right? We're starting to see a pattern here. Now look at price on Friday. We're hugging the 9. Notice the trend. See, understanding this concept, this principle, this precept, this system, this iteration, this process, understanding that is going to give you a massive edge, guys. I literally, dude, I took 2 trades today. They were both bangers. But I weeded out so many bad trades as well because of this concept. Learn to use the 1 hour 9 and understand what a healthy trend looks like, right? Let me just show you. This is healthy, right? Healthy trend right here. This right here is what you want to trade. If you trade continuations, if you're trading reversals, are once again another healthy trend. This works on all time frames. Look at the 2 minute. When I'm in short, I'm holding on chart on the right. Look right here. I'm holding the short because we're not extended. Extended, I exit the short. Right? So once again, any extension is going to lead to a reversal. I don't know how else to say it. Do collect data on it and ask yourself, right? Because now, once again, I used the 1 hour for my second trade, right? Second trade was a long in the same spot we went short earlier. So price rallies back above the 50, back in the end of day open print. I get a red bar right here on the 5 minute, and we get ignored. Let me make sure you guys can see this. So ready? Short play. Oh, battery's dying. I got to go quick. Short play right here. Bam. Right? Well, long play right here. Bam. Now, what do these have in common? Right? Because remember, everything's about being repeatable. What do they have in common? I'll tell you. Critical level. Critical level. Moving average cross. Right? Look at my little arrows. And then red bar ignored for long, green bar ignored for short. That's it. That's it, guys. Really good trade to the upside here. We capitalized on a phenomenal trade. And it was beautiful, right? I got to wrap this up. My computer's about to die. My charger's in another room, and I got to get my daughter to gymnastics. But I just want you guys to know, right? Develop an approach. I don't care if it's even my approach, right? And real quick, before we hop off, anybody, the links are not in the description right now, but I'm going to once I hop off this. I created this here. It's on my website, right? Anybody that wants further detail on the HPT cross, go to my website. I built this for everybody. It's completely free. It is very strict, simple, understandable criteria, and all the data backing it up is right here. So once again, if you're trying to build confidence, control, conviction, you have to run through the data. You have to get familiar with it. And if anybody wants these email attention you need, and you can also get familiar on what we do, right? So this is a very powerful tool that, once again, I want everybody to have. It's completely free, right? And if you're ready to level up and join a team that can capitalize and execute this flawlessly, you already know, click the Trader Boot Camp link below. Offer ends literally in a week, I'm not going to be taking any more people, right? So for I think it's like 7, 8 more business days, you can join the Trader Boot Camp, $100. You get a year access, dude. You get a year access to the HPT Army, right? Listen, you can trade with us for a year. Every single day I'm on the Discord. We trade on Voice Live Friday. You guys already know it. It doesn't matter. It's up to you. The real ones will join because they know we're building a very strong army, right? So, guys, I love you. Thank you for coming. I hope everybody has a phenomenal day. Let's finish this week strong. We're trading live on Voice Friday, right? We're going to absolutely crush this fucking market. I love you. I'll see you guys tomorrow.